There we go. Thanks, Tim. And thank you to Red Cloud for their support from day one. They've been a great supporter of the company and have really contributed to our success. So no, thanks very, very much. Oh, geez. Not sure what I touched there. There we go. All right. Hopefully that's not an omen of things to come. All right. Yeah, we've had a tremendous start to 2024. Sometimes you have a bunch of announcements that all happen at once, but what's really happening behind the scenes is several years of work, by a very great team that we put together at Canada Nickel. So, very, very happy to be able to announce right at the start of the year a $35 million charity flow through with Agnico Eagle on the back end of that, and Agnico Eagle becoming a 12% shareholder. A few weeks later, we announced an investment by Samsung SDI, who's one of the world's largest battery makers. They took an equity stake in the project. They have an option to buy 10% of the project at $1 billion US valuation. That's about 5 times our current market cap. They only get offtake if they make that investment. So, if you're a battery maker, the only reason you're talking to companies like us, is for that offtake. 2 weeks ago in Timmins, we were very fortunate to have the Minister of Mines. The clock's not running, because I will talk until that stops. So we had the Minister of Mines, we had the Mayor of Timmins, and one of the First Nation chiefs who are involved with for the announcement. We're going to build 2 downstream plants in Timmins in addition to the Crawford project. We're going to build what will become North America's largest nickel processing facility, and then Canada's largest stainless and alloy producing facility. What we're building here is not just one project, Crawford. Yes, that's the first one, but we really believe we've got multiple Crawfords there, and that we're working towards a nickel district that will become the world's largest nickel sulfide district. In terms of the nickel market, I'll talk a few slides here. It's not as bad as everybody is talking about. The 6 weeks of news flow that we've seen here is your classic capitulation moment that happens at every market bottom. I was fortunate to be at Inco back in the 2000s when nickel prices went from $4,000 a ton to $54,000 a ton over a 6-year period. That did not happen in a straight line. We've gone through a massive destocking cycle in 2023. That's all it is. Underlying demand is still fundamentally growing at very, very strong rates, almost double-digit rates, and will grow at close to double-digit rates through the end of the decade. The end of 2025, nickel prices fell to $11,000 a ton. That's less than half of where they had peaked out at earlier in the year. If you take all the stories that we've seen in the last 2 months about, EVs hype, EVs not for real, EV demand collapsing, substitute the word China for EV, and that's the same set of stories that we saw back in 2005. I think Chinese demand for most metals has tripled since that point in time, and specifically for nickel, 16 months after we hit that point where everyone said China's done, nickel's done, we went to $54,000 a ton from 11. Now, we're not going to go anywhere near that, but we will see prices back up to $20,000 a ton. The first leg up here, we've seen a 10% increase in prices over the last 2 weeks. That's the first leg up in a recovery that's going to, go through the rest of the year. And again, as the price moves up, you're going to hear and read stories that say, oh, nickel's way over where it should be. Nickel's way over where it should be. That's not the case. We're going to see double-digit demand growth this year. We saw 16% demand growth in 2021. We'll see a repeat here. In terms of where we go from here, we've had a lot of announcements this year. We're well financed to where we need to be through this time period, but you're going to see even more announcements as we go through the rest of the year. We're looking to have the full financing package done for Crawford, with Scotia and Deutsche Bank as our JV equity partners, and then Cutfield Freeman on the project debt side. We had a conference call last Friday talking about the exploration program. What are we going to do with this $35 million of flow through that we went through? And I think some pretty exciting numbers, and I'll talk about some slides on that in some detail going forward. In terms of nickel demand, again, if you read the stories the last few weeks, you would think that nickel demand shrunk last year. You would think that, nickel demand has horribly underperformed all the other base metals, especially copper, because copper's perfect. Copper's the world's best metal. Copper's always great. The nickel demand since 2020 has grown at 9% a year. If you go back to CRU and Woodmac, and I'm going to start picking on these guys because they do really crappy analysis on this commodity, that's more than double what most analysts had forecasted in terms of demand growth for that period. We're just getting into the nickel-intensive phase for electric vehicles. Electric vehicles to date have been driven by China, by Europe. They drive small cars. They don't drive very far, so they can use a very small battery, and that battery can be all LFP, and that'll give them all the range that they could ever want. Now, the fact that the highest growth area is North America, again, don't read the headlines. I think, sales for 2023 were up 50 or 60% versus where we were in 2022. We drive big cars. We drive long distances. We have, big batteries, double and triple the size of the average size battery you would see in China. And those batteries are made up, these days of almost 90% nickel and they'll be made up of 90% nickel, 95% nickel going forward. So if we've done 9% growth so far this decade, we should be able to sort of maintain that for the next 4 or 5 years. And again, there's no one with a forecast that comes anywhere close to it. And if you think I'm just arm waving, I went through the same thing back in the 2000s. Analysts continue to underestimate nickel demand year in, year out, all during that run. And we did almost run out of nickel in 2006. We came within 1 hour of shutting somebody down at Inco. We managed to find 40 or 50 tons for them to keep their furnaces going. So I've seen it before. We're going to go through it again here. So again, don't believe the hype. And just because BHP says something, actually, if BHP is saying one thing, trade the opposite when it comes to nickel. In terms of supply concentration, Indonesia is going to supply lots of nickel. It's going to be the bulk of growth. Nickel supply from the rest of the world has been shrinking since 2016. So yes, Indonesia has to step up because it's the only place that's got projects in the pipeline. The reality is, Indonesia on its own, I'll update this shortly for 2023, they control more of the market than OPEC did at its peak in 1973. Indonesia's done a great job extracting a lot of additional value from a finite resource. And again, going forward, if you have a finite resource, would you like the price to be higher or would you like the price to be lower? And again, it has a material, nickel and stainless steel has a material impact on their current account, on their trade balance. And so it's a material number to that economy. So yeah, they don't want prices going to $30,000 a ton. There was a good article yesterday about one mines minister talking about a range. I think it's a little too low for where they want it. But they want to basically keep the price in a range that they'll make lots of money, but won't necessarily attract a lot of entrants. We're very fortunate to have a project that we can, bring to market, with the kind of prices that we've seen in the not too distant future or not too distant past. So, in terms of what we're doing with Crawford, again, from the early days, what was very attractive was the fact that it was sitting just north of Timmins in the midst of all this infrastructure. The geophysics for these types of deposits gives you 80% of the answer. We've continued to refine that over a few years. And in our regional exploration property, we've got 20 plus properties and we've drilled, I think, about a dozen of them. Our last 100 holes, we haven't had a miss. We're over 100 for 100. And we have a 94% hit rate since we started drilling our regional exploration properties. That's how confident we are, with the land package we've assembled there. We are on track, to be able to get permits by 2025, and we're looking to be in production by the end of 2027. In terms of the feasibility study, which came out year end, very happy with where we landed. Including the carbon capture and storage credit, $2.6 billion, 18% IRR, very, very large amounts of nickel and cobalt, as well as iron, chrome. Chromium is something that doesn't get a lot of attention, but it's a critical mineral in most Western countries. The United States has no domestic source of that material, and it's used in a lot of very, very critical applications. So the fact that A, we can mine it, B, convert it into a usable product for the stainless steel and alloy industry, is getting a significant amount of attention from a number of players. Because we've got the byproducts that we do, able to produce a very low cash cost, and you can see the cash flow generation capacity that we have. Ultimately, in terms of where this asset sits, if you've got a chance to invest in something, you always want something, that is something that a major would ultimately want to own, because that gets the best chance of having your exit value realized. We're well in the first quartile of the cash cost curve. In terms of the carbon curve, one thing I forgot to mention up front, in addition into all this wonderful nickel, we developed a process where we inject CO2 into our material as it's being processed. And because these deposits are hosted in rocks that spontaneously absorb CO2, we're able to store over 1.5 million tons of CO2 per year. That makes us one of the largest carbon storage facilities in Canada. And again, just to give you an idea of what people are prepared to spend to be able to do this, Shell spent $900 million on a first phase project that'll store less carbon than we do. So we spend that amount of money. We get a process plant that can produce a lot of nickel and iron and also store that carbon at the same time. So we've had a huge amount of interest because of that fact. In terms of reserve, second largest reserve in the world, both sulfide and laterite. We would be the third largest sulfide operation globally. Again, since I left Inco, I didn't think I'd ever use the term Western world again, but in today's geopolitics, we would be the Western world's largest nickel sulfide producer, which again matters and unfortunately will matter for quite a while. In terms of this process, all we're doing is harnessing the rocks our deposit are hosted in. They just want to go there. We just have a process that helps speed them up to get there. In terms of timeline, we've completed the first phase of the federal permitting process last March. We'll complete the second stage when we file our impact statement this summer. That puts the government on a 365-day clock to come back with an answer. And so we're expecting that answer in about 16 months from now. We want to be able to be in a position to break ground. And so we'll have a full financing package ready by the end of the year. And, we're looking to have first production before the end of 2027. We're the only new large scale nickel operation that can come into production anywhere close to that timeline. So that's just Crawford. Then we've got this land package that we put together. Again, we've done close to 30 deals over a 3-year period to assemble this land package. We have the geophysical footprint that we're looking at. There's a certain amount of magnetite and ultramafic rock. And so we've been able to zero in on that in terms of what the right magnetic survey response we're looking for. We have 25 times the footprint. When you add up the nickel resource we have in all three categories, that's nearly 10 million tons of nickel with Crawford. For reference, Sudbury is total over its entire existence is 20 million tons. When we say we think we're going to have the world's largest nickel sulfide district, we are very, very confident that we're going to be able to get there. Just to give you an example of how good this targeting is. So you look at the chart on the bottom, that's Crawford. The dotted line there is the resource outline. The target to the top there is our Reed deposit. It has twice the footprint that Crawford does. We drilled 16 holes using nothing but the free geophysics data available from the provincial government. All 16 holes hit. And as I said, we haven't had a miss since 2022 when we've drilled over 100 holes in our regional property. That's how good our targeting model has evolved to. So we had conference call last Friday to go into our plans in some more detail, but the bottom line is with that $35 million of flow through, we'll be doing the drilling to deliver 7 additional resources in the next 15 months. There's very few companies have 1 good deposit, even fewer companies have 2 good deposits. We'll be able to deliver 7 additional resources by 2025, and we believe have the opportunity to make another 6 discoveries from that land package. So again, when we're talking about a new district, this is really a new district. And again, you might think, oh, that how can that be? The reality is when you look at where nickel resources are scattered across the world, there's only a half a dozen regions that supply most of the world's nickel. And so, all the nickel that's coming from Indonesia today comes from basically the eastern part of one island in Sulawesi and a few islands off the coast, and that's it. So basically, they've had a lot of ultramafic rock that got laterized. We've got a lot of ultramafic rock that was serpentinized. And again, all this nickel can come with a low carbon footprint in a place like Ontario because we have low carbon electricity from the grid, and our rocks spontaneously absorb carbon. Just to put it, in perspective, there's Crawford, there's the Timmins Nickel District, because there's also Aston Minerals. It's got a great discovery just south of us near our Sothman deposit. And then you've got EV Nickel with their deposit east of Timmins as well. So, that's the scale of what we've got, relative to all those dots are all the big sulfide discoveries since nickel started being mined 100 years ago. In terms of the downstream, as I said, Timmins is a great location. It's one of the few places that's super supportive of mining. It's also very super supportive of downstream processing. And so we'll look to have those facilities in the area. Any of the CO2 that gets generated in that process will be able to sequester in our tailings. And so you can have that next stage transformation also be a zero carbon process. And again, people are trying to fall all over themselves to find ways to take carbon out of the processing. So in 2024, 35 million flow through. We had Samsung SDI. We've launched our downstream co with Net Zero Metals. You'll see additional offtake agreements done before year end. We'll have a resource and PEA done on Texmont. You'll see a whole series of exploration results as we go through. We'll have that impact statement filed by the summertime. We're about 70% the way through our impact benefit agreements with the local First Nation communities, and we want to have a full funding package in place. So thanks for hearing the story, and looking forward to a very exciting 2024. Thank you.